This video is on zero DTE trading. We're going to compare SPX zero DTE day trading with the /ES. Now, SPX day trading is really popular. You might be able to search on YouTube and see a lot of different information on that. But at the Dorian Way, we give it a little different twist, and we help people who have a large account or a small account be able to benefit with trading options on a probabilistic nature using the SPX, which is super popular, and now using the /ES, which is the same thing as the S&P 500 index, the 500 largest companies in the US. But one is regulated by the SEC, which is under all type of stocks, and one is regulated by the Commodities Futures Trading Commission, which is the futures market, and that is the ES. So it's a lot of similarities. I'm going to go over the main four, and we're going to kind of give you an understanding of the ES and how that compares to trading with the SPX. But before we do that, we want to kind of give you a little history of the SPX, or the zero DTE type of trading, and then kind of give you a setup on how we teach it at the Dorian Way. So the SPX trade is probably about 3 to 5 years old at tops, or it became mainstream about 5 years ago, and it was a process that was done Monday, Wednesday, and Friday, because that was the only time you had zero DTE, or the option expiring on that day. So it expired on Monday, Wednesday, and Friday. So it became really, really popular for retail traders to do a zero DTE trade on Monday, Wednesday, and Friday. Recently, about 2 months ago, you were able to trade SPX on a daily basis, Monday through Friday. So not only on Monday, Wednesday, and Friday, but now on Tuesday and Thursday as well. So you have the opportunity to make money doing this type of process 5 days a week, which is pretty powerful. The ES is the same concept now as well. You can do it 5 days a week, okay, using options on futures, the S&P 500. So to give you a little information on how this is set up, we're going to use this option chain here. We're going to go to this 1 DTE, days to expiration. So the market is closed right now, at least the SPX stock market. The futures market is open, and we'll show you that here in a second. But we're going to use comparison of 1 DTE on both of these. But this is the SPX 1 DTE. Just imagine if you were doing this on 0 DTE. DTE means just days to expiration. So it's a number of ways you can set up this trade. You can do something that is based on deltas. Let's say you wanted to do something no higher than a 7 delta, and you can do a spread of 5, 10, 15, 100 points wide. It all depends on how you want to set it up. So for example, if you wanted to do this one here, was 20 points wide at this 7 delta, and on this put side, setting up an iron condor, that's usually how it's done. It's setting up an iron condor, doing a spread on both sides. Some people try to time the market and do just one side. At the Dorian Way, we primarily teach coming in as an iron condor, because you don't know what the market is going to do, if it's going to go up or go down. So if we're just going to do this 7 delta here and 20 point wide here, so this is going to give you $155 for every contract you do, and this is kind of how you set it up. At the Dorian Way, we teach you how to set this up, how to manage it, how to adjust it, and when to take profits based on the percentage level, and when to wait. Should you wait to put it on? Should you put it on right when the market opens? Should you put it on 15 minutes after, 30 minutes after, hour after? When should you when should you put it on, when should you take it off, and so forth. So if you're interested in learning this at a super high level, then I encourage you to consider joining our trading club at the Dorian Way. We can walk you through the process. We trade this daily on our trading floor live. You can follow us as you learn the process. We've been doing this for several years now. All right, so at the Dorian Way, we usually will do something like setting it up for 50 points wide, because we want to collect at least $100 on each side. So for example, if we would do something like this. This is a 50 point wide on the put side, and on the call side we would do something like a 50 point wide. So this is 50 points wide here. So now you see that with one contract we're collecting at least $2 or $100 on both sides. Okay? So you can do that with the SPX. You can also do that with the ES. Same kind of concept here. We go here to, and this is trading live right now, as you can see over here. Okay? So, and if we were to use the same kind of concept, go around no higher than the 7 delta. This is not the criteria that we teach at the Dorian Way, but we're trying to give you a kind of an example. Okay. All right. So if we were to go to this 7 delta, and let's say we did a 50 point wide here, so we'll be right here on the call side, and then on the put side, if we went to something no higher than a 7 delta, and we did a 50 point wide, it'd be something like this. And then you can see that with options on futures, one of the differences is that the ES is half the size of the SPX. So 265 is actually 133. So if you want to do something that's equivalent to the SPX in size wise, you have to do 2 contracts. So this is us changing this to 2 contracts. All right, so let's break down the differences of these. So it's 4 different type of differences. You have a cash settled part. I'm just going to use some abbreviations here. You have a tax type of benefit, and you have a day trading rule. So you got the day trading rule here. We're just going to use the word rule. And then you also have like the liquidity. You know, how well can you trade the position, right? So you got the SPX here, and then I just put the /ES here, right? And let's kind of break these down by just, you know, kind of making a spreadsheet here. So we're kind of do something like this. All right, so with cash settled, the SPX is cash settled. The ES is not cash settled, but you do not have to worry about being assigned unless it's in the money at expiration. You do not have to worry about it being assigned unless it's in the money at expiration. So this is almost like having cash settled. Okay, so we're just going to put a little mark there. The next one here is tax benefit. So the SPX provides a tax benefit provided through what is called 1256 contracts. It's a tax treatment that allows short-term trades to be taxed at 60% long-term rate and 40% short-term rate, which is your ordinary tax rate. The long-term rate is the capital gains rate, which is right now 20% for the highest tax bracket. So you qualify for a tax break if you're trading with the SPX. The ES actually provides the same type of tax break, and it was originally provided to futures trading. So the ES had this type of benefit before the SPX. Okay? Before the SPX. So you get the same type of benefit. The day trading pattern rule. The SPX is regulated by the SEC, so you are acceptable to the day trading pattern rule. So if you don't have an account over 25,000, not including the buying power used for futures, then you are acceptable to the day trading pattern rule. Means that anytime you trade within a week's time frame more than 3 day trades, then your account will be locked up for potentially 90 days. So you are acceptable to the day trading pattern rule with the SPX. With the ES, it does not apply to options on futures or any type of futures. It does not apply, right? So this is actually an amazing benefit for small counts that want to participate in short-term trading, want to participate in the zero DTE type of trading. You do not have to worry about the day trading pattern rule when you're trading the ES. Now, when we're talking about liquidity, it's a lot of liquidity. You can get in and out on the SPX. It's no problem at all. And believe it or not, it's no problem at all with the ES. Okay, so you have benefits. You have some benefits with the SPX, you have some benefits with the ES, but they're very, very similar. So we teach members how to trade them both. And if you have a small account, we will recommend the ES. If you have a bigger account, we would recommend the SPX, but it all depends on the trader. So thank you for watching this video. We hope that you like it and subscribe to our channel. We'll see you in the next video.